So on my immediate left, we have Warren Lovely, Head of Public Sector Research and Strategy at National Bank of Canada. And we have Guillaume Pichard, who's the Director of Capital Markets at the Ministry of Finance for Quebec in Quebec City. Gentlemen, thank you so much for joining us today.
Sure,
so if you hold some Canadian debt, there's a very good chance that you hold some provincial bonds in your portfolio. I think, Warren, we'll start with you. When people look at Canadian finances, they often think about the federal level, and it's somewhat reasonable, I think you would say, deficit the federal government's running right now, but $15 billion. I think that's reasonable. Some would disagree. But the provincial levels, the provincial situation can be a little bit different. So can you just give us the 30,000-foot view of provincial finances right now? What should investors be thinking about?
Yeah, well, we have a somewhat unique government structure in Canada where we've intentionally, by design, devolved a lot more of our debt to the lower level of government, to the provincial level of government. So, it's appropriate to focus on what's happening at the federal level. The sovereign's a very important credit in the Canadian story, but it's oftentimes at the provincial level where we need to spend more time focusing. It's also at the provincial level where we constitutionally have again provided more responsibility on key social programs, healthcare and education. So for this reason, provincial governments run more debt than the federal level. So the balance sheet from time to time becomes a focus point. And we have moved into a mature stage of the cycle. So having high indebtedness at a mature stage is something that you want to be focused on. But in terms of the current situation, we're now at a juncture where 7 of our 10 provinces are in a balanced fiscal position. So the flow, if you will, the income statement has improved. And that's coincided with some generalized improvement or stabilization in credit ratings, and I think a little bit more confidence from the investor base as well.
We're going to get to Quebec in a second, but the one outlier there is obviously Ontario, and one of the biggest sub-sovereign borrowers, in fact, in the world. They have laid out a path to balance. Does it seem credible based on what you've seen?
Well, so firstly, this point about, you'll often hear Ontario cited as the largest heaviest debt burden of a sub-sovereign government in the world. Again, that's entirely by design in the Canadian context. Again, we bestow our provinces with sovereign-like taxing authority and full autonomy on spending. What comes with that oftentimes is a high level of debt to finance and those services. And Ontario being the largest province in Canada, as a scale issue, often you'll see it high on those lists of indebtedness. So where are we now? Again, we've had a pivot, political pivot, and a reprioritization towards fiscal balance. In Ontario's case, that means tackling the deficit and renewed emphasis on containing the debt burden and working it down. It's, I don't want to suggest that the task is monumental. In Ontario's case, the deficit is about 1.5% of GDP. So in a lot of advanced economy standards, you'd say that's not so bad. The province's path and pace of deficit reduction doesn't look unreasonable. Over a 5-year period, assuming growth continues, they should be able to work their way out of this fiscal hole. And again, it's a renewed emphasis on fiscal repair in Ontario that, again, I think initially at least has been recognized by some credit rating agencies and some investors in the form of stable ratings and some traction and tension in their spread.
Okay, let's shift now to Quebec. Guillaume, Warren recently called Quebec a fiscal Boy Scout relative to what the others are doing. So maybe you could step back a little bit and just give us a sense of how Quebec has managed to turn this around. Still have a high debt level, but you've been running balanced budgets now for several years, and the envy of many other provinces.
Yeah, that's a very nice compliment. It did take some time to get there. One of the tools we use, and we started to do that with the creation of the Generations Fund back in 2006. So basically the government at the time set up a fund where we put revenues mainly from Hydro-Quebec, our main crown corporation. Revenues, by law, they go into this fund, and when the government actually wants to use the fund, the only thing the government can do with it by design is to repay down debt. And over the years, the fund grew to over $13 billion, and we've actually started to using the fund. We've actually, our government that just took power back last fall decided to draw down $10 billion from the fund and repay down maturing issues on the market. But what the fund does, it actually, and maybe I can maybe figuratively say it that way, it really handcuffs politicians to their words to actually, if it's designed by law that revenues, they have to go directly to the fund at the start of a fiscal year when there's a rainy day. A politician just can't raise his hand and say, okay, well, we thought of that earlier, but now we maybe need to build a bridge or to do a new program because the population's not happy. It just can't do that right now. So it directly goes to that. And it's a general consensus in Quebec. The three main parties have run over the Generation Fund, and they've actually used the Generation Fund to repay down debt. So it is a very well accepted form of legislation.
Mm-hmm. Now, let's turn to your borrowing program for this year. You've got about $11.8 billion to do according to the budget. You've already done almost half of that.
Yep.
What's the rush? What are you seeing in the market that's keeping you very busy and trying to get some of that borrowing done?
Well, it's not of a rush. It's the way we approach market is if we see an opening, usually we'll show up. And we've seen very good demand, especially from the Canadian market. We're able to do some long issuance at all-time lows. That was a plus, but demand was there. Investors kept knocking on our door. We also, early on the year, and that's why it's skewed a little bit, our percentage compared to the pace, we were able to do $1 billion US. We did put a no-grow on it. The book was over $3 billion. That was a fantastic deal. So that's maybe why right now we're looking like we're pretty ahead of pace, but it's also we have a very low borrowing program due to the drawdowns that I was referring to from the Generations Fund.
Right. Now, those borrowing requirements do pick up in the next couple of years according to the budget.
Do, yeah.
Would you look to pre-finance a bit this year, given that you're sort of ahead of pace already?
Yeah, we have a very good history of pre-funding. Basically, we do pre-funding to take advantage of favorable conditions on the market. Last year, we did $4.1 billion of pre-funding. That's actually lower. Over the last 10 years, our average is around $6 billion. And the way we look at things, we just don't look at our program this year, but we do look at it for 3 years in advance. So in 3 years, we're back at $24 billion. So we'll try to use pre-funding to get that down because that's quite a sizable program for us.
It is indeed. Now you've done, I think last year you're about 17% in non-Canadian dollars, so foreign currencies. Would you like to do more of that and increase that this year and next? What's your thinking
absolutely.
there?
If we get the opportunity to do, we've done $1. We returned to the SEK. We did some Aussie, some New Zealand dollars as well. But if we get an opportunity to do an euro deal, a sterling, that would be great. Right now, the arbitrage, when we compare the cost of these deals to the cost of what it costs back in Canada, is not there. But definitely, we're going to be we're in a position we could be a little bit picky on the cost. But going forward, like I say, if we're looking 2 years in advance, we get a good opportunity in terms of demand, and the cost is, let's just have this expression, cost effective for us at the moment. We would definitely be back in the euro market. That's a core market as long as the US one is.
Right,
If I could
interesting.
just add some perspective to this. So, as I was saying, we've long had the situation where our provincial sector has been, carrying debt burdens. What it means in practice is that we have pretty sophisticated provincial borrowers, and Quebec's a great example of that. But really, across the provincial landscape, you have governments that know how to fund themselves, right, and that have really gone and done a very good job cultivating sources of demand and the investor base. Quebec's in a really unique and advantageous position in that most of the borrowing that Quebec is conducting is really to cover refinancing needs. The net stock of Quebec debt is barely growing.
Plus infrastructures.
Mm-hmm. Yes. So it's really an exceptionally strong story with really a technical limitation on the amount of new bonds being issued. But in general, what you've seen And Quebec is obviously ahead of schedule, as Guillaume noted, but other provinces are there as well. Ontario's done a very good job getting itself funded. We're 20% through the fiscal year. You know, they're well ahead of pace. We've seen Manitoba likewise get a nice jump start on their borrowing programs. And this is something that we've grown accustomed to in Canada. Our provinces are savvy enough to recognize funding opportunities when they arise, to take advantage of them. Moreover, what we've seen, I think a broader trend this year, and it's creating some echoes of 2017, is not just in Quebec's case, but in other cases, Manitoba, Ontario, British Columbia. We've seen provinces utilizing these international markets to divert supply away from the domestic market in many cases, and to service pockets of demand. Just even this week, traveling with my US dollar trader from New York, you come across really tremendous demand for provincial bonds in US dollars. There's obviously an installed investor base for provinces in euro-denominated, as well as, of course, the core domestic market. So I think, you know, you've seen provinces quite sensibly take advantage of strong demand for their paper, despite this somewhat elevated and uncertain.
Right. And obviously they're looking for yield here. Everyone's looking for yield these days. What are the other things that that's attracting them to the provincial debt?
Well, yeah. So you know, yield on a relatively safe asset, you know, can be hard to come by, right? In many cases, I think, you know, oftentimes when you think about the marginal shifts in demand for provincial paper, well, in some cases maybe it's a byproduct of investors wanting to have more US dollar exposure and provinces being able to provide that. In a Canadian context, you know, provinces are really a natural vehicle to get exposure in Canadian dollars with, you know, some non-trivial yield. We think about the current yield environment in Canada, you know, in the 10-year sector, roughly 1.5% underlying Government of Canada yield. You can get almost half of that, you know, in a benchmark provincial credit. So this is some non-trivial pickup for those investors that want to hold Canadian dollars. And as I say, where they're more inclined to hold US dollars, again, you can supply them. Our provinces, Quebec, Ontario, British Columbia, Alberta, Manitoba, you know, can supply them with that US dollar.
Right. And when you meet these foreign investors, what are some of the questions? What are some of the concerns as they consider buying some of these issues?
Yeah, well, a lot of things we've already talked about on this, you know, in this session today. You know, housing has long been a hot button issue, and it kind of depends where you go. If you go to the U.S., I mean, the U.S. investors want to talk about housing all the time because they can oftentimes project that U.S. housing market correction onto Canada. I think inappropriately, but nonetheless, housing remains an issue. You know, energy. Let's be clear, and our energy policy and our, you know, pipeline development, the broader infrastructure story in the energy sector is obviously quite pertinent for some of our provinces. You know, and really, I mean, I think at this juncture, in many cases, we've got, as you've heard today, a fairly optimistic or at least constructive view on the macro environment here across Canada. Diversity is the name of the game, right? We've talked about diversity from an ethnic perspective, from our immigration policy and so on. Diversity, you see that in spades across our provincial credit landscape as well. You know?
Maybe I can jump in on the concerns some of the investors have. Meeting a few investors, one of the concerns, of course, is trade tension. With, of course, with NAFTA being renegotiated, Mexico just ratified it. There are talks probably today later on between Trump and Trudeau. But for us, one of the big things was the tariffs that were lifted off aluminum and steel, especially aluminum. Quebec is the largest supplier of aluminum to the U.S. in the world. So that was a very, very big improvement in the trade situation. And even in those circumstances, international exports, they grew last year for us, even with the uncertainty surrounding the trade. So we're going forward, we're quite positive still on that front.
Now, Quebec has done a few green bonds, Guillaume. Can you give us your sense of whether you might increase the issuance there, and what's the appetite like for that security? There seems to be a lot of discussion around the world about ESG investments in general, and there might be an opportunity for it.
That topic certainly has gone mainstream. We've issued in Canadian dollars only, and $2.3 billion, 4 issues in total. I always get the question from investors, especially domestic one, can you do more? The answer is we are trying our best to do as much as we can right now. With green bonds, you've got to have an infrastructure project that's behind it, and it needs to be a good, green, common sense infrastructure project. And it also needs to have some large disbursements towards it in a timely manner. So there's a lot of check boxes that you have to do before you actually bring a green bond to the table. And what we're actually doing internally to be able to produce some more, we've got some public transit infrastructure coming, but internally we're actually looking for something to add additionality to the to our program, meaning we've got some buildings that, right now they're not in the plan to be energy efficient. So internally we're looking, well, how can we make this part of a green bond program? Can we get a LEED certification in them? But it is, government is a big boat. It is something that's going to take time, but hopefully we can get there. But it's been such a success, that green bond program for us. We're certainly going to keep being very devoted to it, and hopefully right now we need to feed our domestic market. We're issuing in Canadian dollars, but once we feel that demand is met, hopefully down the road we can issue in dollars, issue in euros. We would get, to your point about diversification, we would get a lot of diversification. Investors don't buy us now, probably would show up if we did a green bond in euros or dollars.
Right. Is that something that might happen this year, do you think? Or
that's going to be hard. That's going to be hard. Right now, when I look at the disbursements through our green project, it's slow for the rest of the year. So, and we still want to issue in CAD dollars.
Right. So maybe
long-term project. Long-term project.
Of course, one of the ironies here is that, as Guillaume knows, Quebec's running a budgetary surplus, right? Sort of a structural surplus. The little bit of funding that Quebec is bringing on net terms is really for capital. Even the non-green bonds in Quebec you can kind of think of as almost quite climate sensitive, given the low carbon footprint in the province. And that's, I think, true in a lot of cases across the Canadian landscape. We've seen obviously a movement to broaden the issuer base in terms of green bonds. We've seen this at the municipal level. We have some of our crowns doing this, provinces, of course, active in the space alongside some financials. But in the provincial context, to the extent a lot of the borrowing we're doing on a net basis is for climate-sensitive capital projects, you can kind of think of the green attributes of our regular vanilla bonds as being pretty constructive as well.
Right. We're almost out of time here, but Warren, I did want to ask you a little bit about the election. I could ask you your prediction, but I won't put you on the spot there. But I would like to get a sense of whether you think a change in government, and if the election were held today, it looks like we could have a change in government, in a Tory government at that, likely minority. But what does that do you think, for the fiscal outlook for the federal government?
Well, you heard earlier this talk of a fiscal impulse in Canada, and really what that's telling you is that the current federal government is happy to run modest deficits with quite a low debt burden and good fiscal sustainability. That's providing some support to the economy. You've seen a slightly different vision emerge from the opposition party on some key issues in terms of environmental policy, some tax policy issues. But as we heard earlier, no real intent to pivot to immediate surplus. So I think what you could expect in Canada, even if we were to get a change of government, is that we provide at the federal level some ongoing support for the economy. And that's really quite helpful, given that it's the federal level of government where we have perhaps the greatest flexibility to run some modest deficits. And I often say that, look, the federal government's stimulus allows the provinces that need to undertake fiscal repair to do so without jeopardizing their local economies.
All right, we'll leave it there. Thank you very much.
Thanks a lot.